This is going to be a big show because it's actually all about the charts. I'll tell you why it's all about the charts. It's pretty simple. So you look at this chart, it's the US dollar index. It's down. The US dollar index is down, which is pushing this chart up, which is the NASDAQ up 1.34%, 165 points, which is giving some welcome relief to this chart, which is the Bitcoin price, which is 1.7% up. Not enough up. And I'll tell you in a second why it's not enough up and why we could potentially see a pump. But this chart over here is giving this chart a little bit of a dump, which is the market dominance, the Bitcoin market dominance. And you can see that that's dropping, which is bringing welcome relief to altcoins because we haven't had altcoins pumping like this for a couple of days. Even UST is up 18%, holding on by an absolute thread. Okay, then you've got the US government bond, the 10-year yield, slightly up, slightly up. You got ARK Innovation slightly up, which means people are moving into growth. You got Twitter down because possibly this deal is going to fall apart. You've got Coinbase up 5.66% because people are investing in crypto again. And you got Fear and Greed at probably what I call historical levels at 8. So that is what we're going to be talking about the show. It's actually a show all about the charts. Today, I'm becoming a chartist. Let's
Why am I again?
Fred. It's Fred on the background. It's Fred on the background. Welcome back, Banter fam. I wonder, did you tune in because you wanted to see this? Or did you tune in because you wanted to...
That's Fred. I'm not taking blame for that.
Because you wanted to see that? I'm going to cut Fred's little wiener off. Sitting in the backstage playing with the tiles. So let me know what you tuned in to watch. But either way, you're going to get them both. So I'm going to show you what... Here's Fred again. Hold on. Here. Let me just ban Fred from the studio. I have to actually ban Fred from the studio. I have to ban him. He's not allowed in the studio. Fred. Yeah, wait. Sheldon, there's a button here that says ban from studio. Oh, you can't ban a producer from the studio. This is terrible. Well, listen, either way, whatever you tuned in for, you're going to get it today because we're going to be talking about this and why we could be getting a serious Bitcoin pump. Finally, I think we deserve it. I think if you've been here for the last week, you deserve a pump. You definitely do. And we're then going to be talking about this Terra Luna 2.0 plan and why I'm not going to support it and why I think the Terra Luna 2.0 plan is actually going to fail. Are you guys finished playing with the tiles? Are you and Fred?
We have it now.
So you finished playing the tiles. Can you let me drive the show?
It's not me.
Okay, Kyle.
Look, my hands are here.
Step away from the computer. Okay, there we go. Now we can get on with the show. All right, so if you're new to the channel, after a rough week, welcome to the channel. We're going to help you guys rebuild your portfolios. We know all your portfolios are wrecked, especially those people who are holding Luna. We know you are wrecked. And so we're going to help you rebuild. I don't know if you saw, but you saw Sheldon is coming back with a new kind of show. And that show is going to get people to effectively trade their portfolios back. So it doesn't really have a show time anymore because he doesn't know when the trades are going to be. He's just going to be trading with you guys. So what you need to do is you need to subscribe to the channel and you need to hit the notification bell. And the reason why I need to hit the notification bell is because that'll tell you when he's going live. Because there's no other way to know when he's going live. Whenever he sees a trade setting up, well, he's going to be there and he's going to be setting up the trade for you guys. So make sure that you go live with him and also make sure that you are subscribed to one of the exchanges. There are exchange links below. There is a KuCoin link for altcoins. You got a Bybit link for the other ones. Make sure you subscribe with one of the 2 links that are here below. With Bybit, remember, we are going to start 10xing people's portfolios. We're going to do that again today. And with KuCoin, we're going to be giving away $1,000 a day every single day to one lucky account holder, because we know that right now everybody needs $1,000. So for the next 25 or 30 days, we're going to be giving away $1,000 to people who sign up using the KuCoin link below, and you're all going to get sign-up bonuses. So on Bybit, there's up to $4,300 in sign-up bonuses. On KuCoin, I think there's a $500 sign-up bonus, but then you can win $1,000 a day every single day. So make sure you do that so that we can help you guys rebuild your portfolios. Let's start getting into the data today. And I think we're all talking about this NASDAQ pump, which is bringing in a slight Bitcoin pump, but not enough of a Bitcoin pump because of the capitulation that we had here in the last couple of days. It's going to be tough to get capital into Bitcoin, but don't worry, because I'm sure you all feel super, 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 super comfortable and super confident about what the Fed is doing, because the Fed came out today and they said, I bet you this is very reassuring. They said, Bullard comes out and says, it's not exactly clear what the effects of the shrinking of the balance sheet will actually be in the US or globally. It's not clear. That's not what I want to be hearing from the Fed, and especially not after what they've just been through, what they've just put us through. They put money into the economy, told us that inflation was transitory, and now they're coming out and they're saying, look, we're not exactly 100% sure what the effects will be of this quantitative easing. Now, one person Mohamed Elrond, he went on TV today, and he said the Fed actually made 3 mistakes. I want you to hear the part about the 3 mistakes that he said. Just listen to this.
We're looking at these Walmart numbers, we're looking at these Home Depot numbers, and we're trying to make sense of what they mean for the larger economy. What do you think?
So what they mean for the larger economy is what the retail sales number tell us, which is that this economy remains relatively strong, that the risk of recession is there but low, but the growth is coming down. So this is a slowing economy, but this is an economy that's unlikely to go into recession unless we get another policy mistake or a market accident.
When you say another policy mistake, you're already suggesting that a mistake has been made. Ben Bernanke just saying that there was a mistake already made. What do you think would be the next
Guy
mistake
still believes there's no recession.
So there have been 3 mistakes made, and your interview with Ben Bernanke actually pointed out to them. It is very unusual. I don't think people quite realize how unusual it is for a former chair to say this. But the first policy mistake was the mischaracterization of inflation. The second policy mistake was when they corrected the mischaracterization, they didn't move fast enough. And the third one is that they haven't been as brutally honest with the world as they should be in terms of the difficulty of soft landing this economy. So that is what's going on. The next policy mistake, I think, is going to be not to get stuck in the muddled middle between dealing with inflation expectations properly, or alternatively, dealing with the recession risk properly.
Okay, so he still thinks that we're not going to be in recession, which is quite ironic, because if you think about what Elon Musk said, listen to what Elon Musk said.
It's always difficult, and one should assign probabilities to these things. But ironically, I did last year. People asked me what I think about the economy. I said, well, I think we might enter a recession in approximately spring of 2022.
Called it. Nailed it.
Yeah. Now the thing is that recessions are not necessarily a bad thing. Listen
to this part. Listen to this part.
I've now been through a few of them, and what tends to happen is if you have a boom that goes on for too long, you get misallocation of capital. It starts raining money on fools, basically. It's like any dumb thing gets money, and I'm sure you've seen a few of those. So at some point it gets just out of control, and you just have a misallocation of human capital, where people are doing things that are silly and not useful to their fellow human beings. And then those companies, there needs to be sort of an economic enema, if you will, to have everyone sort of shift uncomfortably in their seats. But
I'm sorry, it's just I'm visualizing it. The economic enema.
I mean, listen, it's got alliteration. So
This too shall pass.
Just remember the
Eventually
economic enema
does its job. It clears out the pipes, if you will.
Yes.
And sort of the bullshit companies go bankrupt, and the ones that are doing useful products are prosperous. But there's certainly a lesson here that if one is making useful product and has a company that makes sense, make sure you're not running things too close to the edge from a capital standpoint. They've got some capital.
All right, so if Elon Musk 18 months called it, so I don't know how the Fed couldn't have called it. And everyone, or someone here says, I think his name's 1,000 Friends. He says the Fed is manipulating the market with narratives. So I saw something today, which I think was very funny. There is a bingo board, which Adam Cochran made, with what the Fed's narratives are at the moment. And I mean, I challenge you guys, when the Fed starts speaking, and there's lots of people speaking from the Fed today, actually, just use this bingo board. When they say Chinese shutdown, when they say 75 burps, when they say recession, just cross off the bingo board. And you'll see how the Fed is actually driving a whole lot of narratives. But let's quickly just take a rain check of where we're at right now. It feels like the worst may actually be priced in. And I'm not the only one that says it. We do know that when the news cycle turns completely bearish, then that narrative is probably pretty finished, because you got to be ahead of the narrative. You can't be riding today's narrative. And if you look at where we are today, last week there were over 8,200 articles printed, the second most of any week in a decade, printed around a bear market. So with a mention of a bear market, which means that right now we're in the midst of a bear market and consumers are searching for the bear market. But you got to be smarter than that, because you got to think about what happens after the bear market. You can't be trading inside today's narrative. You got to be trading what the next narrative is. And if everybody's talking about a bear market, then you can rest assured that we are in a bear market, and that narrative is pretty much historical. We also see that the actions of the fund managers are exactly that. So look at the actions of the fund managers. They have the highest levels of cash at the moment, similar to 9/11. So 9/11 was the only time where fund managers actually had higher or more cash, or traded out of equities, traded out of everything else, and held cash. Right now is the highest level of cash since 9/11, which kind of means that those that are selling are pretty much have probably sold. Now, we're not at the bottom. We haven't seen full capitulation. We haven't seen full capitulation yet. We have seen the highest levels of cash since 9/11, the growth optimism at a record low, the biggest equity unwind since 2020. So we have seen quite a big correction. And I think the markets have taken a lot of pain. And that's why I think you're starting to get some kind of relief rally today, and you're starting to get a relief rally of the growth stocks. And even some of the biggest banks. So JP Morgan came out today and said that they find that equity markets are pricing too much recession risk, and therefore they are slightly more pro-risk. But they are saying that there may be a spillover from crypto to traditional markets. And what are they worried about? They're not worried about UST. They're worried about Tether. They're saying if Tether collapses, then we could have some forced sales into the market. So that's one thing they're keeping their eyes on. And what all of this has basically done is it's put the traditional markets back to the same levels where before the little meltdown we had after Powell spoke last time. Remember, after Powell spoke, we had a little bit of a meltdown. Now the markets are back to below those levels, and it looks like we're seeing some kind of recovery. BlackRock, one of their guys, he says that U.S. markets could improve significantly in the summer after the Fed's QT tightening. At least 90% of this year's move in US rates has already happened and already priced in. So they're saying, okay, everything's priced in now, and it does feel like there's a slight new dawn, so to speak. I don't know if you guys saw this, but JP Morgan was pricing in this risk of Tether falling down. So someone went and got Tether's white paper, not their white paper, but their prospectus papers. And it says here, we understand all the risks. Here is a summary of the weaknesses in our approach. So one is, it says we could go bankrupt. The other one says our bank could go bankrupt. The third one says, our bank could freeze or confiscate the tether. And the fourth one says, we could abscond with the reserve funds. So they're kind of like, they're warning you. They're saying, look, we may go bankrupt, our bank may go bankrupt, or we could just abscond with your money. I mean, Tether got it all good. It's no wonder that right now people are drawing down on Tether. I saw that $7 billion had been removed from Tether's market cap. So it just shows if you don't have transparency, you're going to lose a lot of your usage. All right, let's talk about altcoins, and let's talk about why crypto may be seeing some kind of a bounce. I mean, we're seeing a little bit of a bounce in altcoins again, and I see that people are still playing the Luna and UST casino. They're making Luna and UST into a casino based on the Terra 2.0 thing, and we must look at that Terra 2.0 proposal. But there are some metrics, and these are not silly metrics. These are metrics from a director of global macro for Fidelity. His name is Jurian Timmer. He's coming on to Banter, I think, next week Friday with some big names. I think Raoul Paul's on. I think he's on. So some big names coming on. But he looked at a whole lot of metrics, and we should look at these metrics because a lot of these metrics actually make a lot of sense. He says the first thing is, let's look at the favorite metrics, which is Bitcoin versus gold ratio. So you can see that's the Bitcoin versus gold. When you take the price of Bitcoin versus the price of gold and you look at the ratio. And he says, first up, Bitcoin gold ratio, which I see is a barometer for how well this aspiring digital store of value narrative is playing out versus the original store of value. It's now resting on major support. So it's resting on major support, and he's expecting a bounce here. So at the same time, defending the Bollinger Band shows the ratio is now 2 standard deviations below trend, which he says there could be a bounce. He then looks at the dormancy flow, which is a measure of the strong versus weak hands. And he says when you adjust the dormancy flow for all the entities that we know about, he says it's now at the lowest level since 2014. So the dormancy flow, which means that people are holding onto their Bitcoin. He says then you look at the valuation, the current swing to 25K, Bitcoin is now below the price currently suggested by both the mobile-based curve and the more conservative internet adoption curve. So what he's saying is if you compare Bitcoin to internet adoption and you compare it to mobile phone adoption, we know that Bitcoin is being adopted much quicker, but the valuation is much lower. So the relative valuation of Bitcoin. So it just shows that all the metrics are now showing that Bitcoin has been hit way too hard. And yeah, things can stay undervalued for quite a while, but they can't stay undervalued forever. So he looks at this and he says, if you compare Bitcoin's growth with internet growth, you can see that the growth is high, but the price is low, which is something that you should be looking out for. He also looks at, I think he looks at the stock to flow model, and he says that if you look at the stock to flow model at $25,000, Bitcoin's future return has materially increased. So again, you look at that, and then he looks at the long-term hodlers, and he says it's interesting to see that a 60% drop in the price of Bitcoin hasn't deterred the hodlers for more than 10 years. The hodlers, people are holding for more than 10 years, are at the highest. 13% of all Bitcoin is now being held for 10 years. I think what he's not pricing in here is the fact that a lot of those Bitcoin are lost and they're never going to move. So 10 years is nothing. So he says, all of the above tell me that Bitcoin is not only at solid support, but also attractive value. The one caveat is Bitcoin is sensitive to equities and they need to recover for any recovery in Bitcoin. So he says, Bitcoin was the canary in the coal mine for equities. When Bitcoin went down, then that was the canary in the coal mine for stocks. So that's what he's saying. We also read that during the Terra Luna crash, institutions poured $300 million into Bitcoin. So who was buying? Well, retail was selling, Luna Foundation was selling in panic, and the people that were buying were the institutions. And then the other people that were buying was the Canadian ETF. The Canadian ETF, they accumulated more Bitcoin. They're now at an all-time high. They've got 42,500 Bitcoin. And that's, one ETF in one, I want to say shitty little country because I don't like Trudeau, but you can't say shitty little country. But in Canada, where there is an ETF, that ETF's got 42,500 Bitcoin. Imagine what happens when they led an ETF in the United States. Imagine how much that will open up. And I think the Grayscale ETF, the conversion of the Grayscale fund to the ETF is due in July, I think June or July. So it could mean that, that may be the catalyst. We could just get the ETF approved because the SEC is running out of excuses. The SEC is running out of excuses. Eventually, they're going to have to approve it. And I'd be super surprised if they didn't approve the Grayscale ETF. And if the Grayscale ETF is the one that's approved, we're talking about June or July when the SEC would have to make some kind of ruling about that. So that is where we're at. That's the Canadian ETF. We also had the A16Z report. And remember, when you look at the A16Z report, you're talking about a VC report. And VCs is a very, very, very long time range. They look at like the big picture. And what they're seeing is that if you look at crypto, I'll show you a couple of metrics. So the first thing is they talk about the growth in mentions of Bitcoin. Now, when you zoom out, you see that the growth is about 196.4% in the price. And in terms of social media mentions, the growth is 207.5%. The reason why that's so relevant is the more people talk about it, the more mainstream it's becoming. And you're talking about developer activity also up 74.4%. And obviously then startup activity, 53.9%. So if you zoom out, all the metrics are still looking amazing. And the reason why that's so important is because if all the metrics are looking amazing and the prices come down steeply, that just gives you an idea that it's probably a buy the dip opportunity. And for those of you who are skeptical about starting to buy the dip, just remember that all the fundamentals are very much intact. Now, let's go through some of the big findings from this Andreessen report. So they're talking about where we are in the cycle, and I think we looked at the numbers there. They're saying that Web 3 is much better for creators than Web 2. So they take Web 2 being Facebook, YouTube, that's the Web 2 creator economy, and they compare that to the NFT economy. Now, this is absolutely staggering. So get this. They counted 22,400 Web3 creators based on NFT collections and compared them with nearly 3 billion users posting content on meta platforms, whilst in absolute terms, so they would take it, whilst in absolute terms, Spotify and YouTube paid out more. They paid out about 7 billion and 15 billion respectively per capita. So when you look at the per capita, so in other words, per creator, what is Web 2 paying and what is Web 3 paying? So, I mean, this is a huge number. Web 3 is paid out $174,000 per creator, while Web 2 is paying out $0.1 per creator. Just think about that. So Meta, which is Facebook, paid out $0.1 per user. Spotify paid out $636 per artist, and YouTube is paying about $2.47 per channel. So what they're showing is that how Web 3 makes it how Web 3 is much better for creators. So that's the one thing they said. Just one second. Need to get a tissue there. We don't do Colombian flu on Tuesday. What's it? Tuesday today. All right. So the next thing they're saying is that, even though we're feeling a little bit demotivated, what we mustn't lose sight of the fact that what we're doing really has real world impact. So you can see that you take all the different things that are happening, like helium, like Bitcoin, like a whole lot of other things, and you're realizing that we are having already these things are having a real world impact. Then what they're saying is, if you look at the share of developers, where are the developers going? Because remember, the developers bring in the products bring in the money from the VCs, the money from the VCs brings in the users. So we want to be following the developers. And by far, the most influential developers ecosystem is still Ethereum, which is a hint about where you should be allocating your money now. So you should probably be allocating your money a lot into something like Ethereum. You can see that the number 2 share of developer is Solana. So you can see that. And then the rest of the chains are low. And I think what you need to do is you need to zoom in here and see where the developers are, because this is the one metric that's never wrong. This metric, the share of developers, is never, ever wrong. It's always right. Developers, money follows developers, users follow money, transactions follow users. So that's the metric. So Bitcoin will continue to grow, and it will probably continue to be king. But look at Ethereum. Look where all the smart money is on Ethereum. And I think if you look at this chart over here, that's the BTC ETH chart. You can see that even despite what's going on here, it's still it hasn't printed a lower low. So it's still looking pretty good. And that keeps the trend that's been going on for quite a while. Like you look at the Ethereum BTC ratio. Now remember, we have got the Ethereum merge between proof of work and proof of stake. So they're going to merge the chains, the proof of work to proof of stake chain. We've loosely called that ETH 2.0. To me, that is the biggest risk in crypto at the moment, but also the biggest opportunity to crypto at the moment. Risk, because if it doesn't work, then you think what we saw with Terra Luna was bad. Wait until it happens on a $250 billion chain. But if it does work, then all of a sudden you're going to have institutions being able to invest in a product which is liquid enough, where there's a big share of developers, where there's a staking reward of 10 to 15% potentially, where there's just a whole lot of good reasons for them to invest in it. So that could bring in a lot of money into Ethereum. So if you look at what they're looking at here, which I found very interesting here, they're talking about rivals for Ethereum, and they bring Phantom in here. So even though it's very small, they're bringing Phantom into it. So that's one other thing which I saw. Also, I think what they talk about is that we're still very, 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 very early, and they compare this to internet users and stuff like that. And they're showing just how early we are on the price curve. So we're still very, very, very early on the price curve, which is a lot of good news. If you were here this week and you thought, okay, maybe I'm not going to have enough time to make up the money that I lost, well, we've still got 500 days. We're early enough. We've probably got 450 days left, and I think we can make it back in 450 days. And tomorrow we're going to start putting together a DCA portfolio. I saw a version of it today. Wasn't happy with it. So tomorrow we start with a nice DCA portfolio. Okay, let's talk about this. Don't know how many of you seen the proposal, but there's a proposal going around launching or forking the Luna chain or the Terra chain to create Luna Terra 2.0. So I don't know, Luna Terra 2.0. I don't know how that sounds to you guys. Let's quickly look at what the premise is for all of this. So what's the premise? Now they're spinning a narrative, and the narrative is, I want to see if I can find you that tweet, that Terra is more than just UST. I didn't see it that way. I don't see it that way. But they're saying, look, it's more than UST. There's a whole lot of builders and whatever else. There are a whole lot of wallets and whatever else. And Do Kwon is now pushing this plan, this agenda. And in terms of this plan, what he says is, look, there's a revival plan. We're going to fork the new chain into a chain without the algorithmic stablecoin. So you're going to have this chain without an algorithmic stablecoin. And that's going to be called Luna. And then the new one is going to be, the old one's going to be called Luna Classic. And the new one's going to be called Luna. It's like Ethereum. When they forked Ethereum, you have Ethereum Classic, which is actually the real Ethereum chain, believe it or not. Because in the old days, there was the DAO hack. And when the DAO hack happened, they had to make a decision whether they should reverse the chain. And at the time, Vitalik actually voted to reverse the chain. Believe it or not, Vitalik voted to reverse the chain. And that there were a whole lot of people that didn't believe that they should be reversing the chain because that's not blockchain. And that's how we got Ethereum Classic and Ethereum. Ethereum Classic is the same thing, but with the tokens of the DAO hacker belonging to the DAO hacker. And Ethereum is the chain that split and went back in time and split and split that. So that's exactly what they want to do with Terra. And he says, look, we've already got a whole lot of, let me switch this garbage off. He says, look, we've already got a whole lot of essential apps. We've got infrastructure, we've got a DEX, we've got Astra, we've got Loop, we've got TerraSwap, we've got an Explorer, we've got a payments app, we've got a whole lot of wallets, we've got lending apps, we've got staking and derivatives apps, we've got everything. We've got everything else here, everything that a chain needs to succeed. And so what he's saying is, look, we can now fork this chain. So let's talk about what this fork is. He says, issue 1 billion new tokens. This is where I don't agree with it. One is 25% of the tokens will be given to a community pool controlled by governance to build the community. 1% of essential developers to start building it. 4% essential developers over time. 35% of the tokens go to bonded and unbonded Luna holders pre-attack. okay, so far so good. So far I'm kind of okay. I'm kind of on board with the plan. This is where I'm not so on board with the plan. 10% goes to Luna holders at the launch snapshot. So basically, if you buy from the 6 trillion or whatever the number is now, you get these vested tokens. Okay, so he's encouraging people to go and buy Luna shitcoin now so that they can get 10% unlocked at the Genesis event and 90% vested over 2 years. I don't know. Then he says 25% to UST holders at the launch. Huh? Launch, meaning encouraging people to go and buy UST now, which is why UST is holding on by thread. Why has UST still got 8.8 cents worth of value? Because he's encouraging people to go and buy it, which I think is absolute madness. I called him today. I got into Telegram with him, and we were talking, and I said to him, look, can't support a plan like this. Cannot support a plan like this. Cannot support UST holders today being given 25% of the chain. Let's do some rough calculations. If they launch this chain and this chain has a $5 billion market cap, is that fair? I mean, is a $5 billion market cap fair? Okay, I mean, let's just understand. If there is a $5 billion market cap, what does it compare to? Compares to Polygon? Nah, Polygon's worth way more. I mean, would you invest into the new Luna into Polygon?
Layer 2.
You'd invest in layer 2. So let's say $3 billion. So 25% of $3 billion is what? $750 million. So $750 million goes to $10 billion worth of UST. That makes UST worth 7.5 cents today. If you think it's going to have a $3 billion market cap. Okay, so anyway, now what happens is everybody's been voting and they've come out and some are in support of Do Kwon, and of course he's tweeting he's retweeting the ones that are in support of him. But now the thing is, he's already got he's got 932 Twitter followers. So Valkyrie retweeting it, saying that they're going to support this. Nebula saying we want to rebuild. One of the validators, small validator K, saying we're going to rebuild. Truth is, even though we got all these things, what we saw today is that people aren't actually voting for this thing. Right now, the preliminary vote is 90% against this. So again, I say to you guys, I think what we need to do is we need to bury this. So I'm saying, unless something really crazy happens, we're not going to be talking about this anymore. So look at this tile, take a photo of this tile, take a photo of it. It's time for us to move on. For those of you who have problems moving on from relationship to relationship, we'll give you a counseling number. But it's time to pack up our shit, stop worrying about this, and actually start moving on and rebuilding our portfolios. End of story. Like, let's stop talking about it. Let's move on. Let the regulators deal with it. The regulators are not going to deal with it. Korea, Do Kwon is going to have to go and appear in front of a Korean, I don't know, what do you call it? A Korean commission or whatever you want to call it. Gary Gensler. I mean, we've basically given this guy more ammunition than the Republicans gave the Americans. I mean, that's what we've given. We may as well have given this guy a fucking hand grenade. That's what we've nuked ourselves. We've nuked ourselves. Anyway, let's stop talking about it. Let's just move on. Let's move on. Let's talk about other stuff. It just upsets me. No more. I don't know. Have you ever, if you got kids, you know this. You said that, that the kids have got like these songs that play in your head. It says, we don't talk about Bruno. So now we don't talk about Luna. No, we don't talk about Luna. We don't talk about Luna anymore. Finished. Let's move on. Let's move on to bigger, better things. What are bigger, better things? I don't know if you guys have been watching, but Twitter. So Elon's having this like public fight with Parag. But regardless of what happens, Elon's won because he showed up Twitter. Because he threatened to cancel the deal. Because he says that Twitter's read of the fact that there's only 5% or less spam bots is absolute garbage. Now, I mean, we know that it's absolute garbage. So, I mean, just listen to what he says. I think it's brilliant.
What's new in your world?
Well, let's see. I guess right now I'm sort of debating the number of bots on Twitter with Parag on Twitter, and currently, what I'm being told is that there's just no way to know the number of bots. It's like as unknowable as the human soul, basically.
So
We have no idea what level of witchcraft and alchemy is needed to determine this bot percentage.
have you determined?
I said, like, why not try calling people? But I haven't got a response. You know, like, have you tried calling people or something? You know, like maybe try
The
that.
answer? It's not a bot.
No, I don't know. But I think like that would be one of the things to do, to say, like, have you tried calling them, as opposed to like trying to read the tea leaves here? That's like impossible, you know. Obviously, you can have an account that looks exactly like a human account, or is being operated where one person is operating 1,000 accounts or something. But that person can only buy one toaster. They're not going to buy 1,000 toasters. So you care about like number of unique, real people that are on the system. It's extremely fundamental. And anyone who uses Twitter is well aware that the comment threads are full of spam, scam, and just a lot of, you know, fake accounts. So it seems beyond reasonable for Twitter to claim that the number of essentially the number of said another way, the number of real unique humans that you see making comments on a daily basis on Twitter is above 95%. That is what they're claiming.
Garbage.
Does anyone have that experience?
Garbage. Garbage.
Exactly.
I mean,
Really? It's like, there's a bridge I'd like to sell you, you know. You know.
I mean, regardless of what happens from this point on, I mean, he showed up Twitter. So Twitter now kind of have to sell to him because he's shown up to all their advertisers. Remember, the advertisers, they don't pay per product sold or per click. They pay for brand advertising. And they think they're advertising to humans, but they're advertising to bots. I think I've got, on my Twitter account, I think I've got more bots than real followers. I'm convinced I have more bots than real followers. Anyway, what that's done is it sent the Twitter share price down. Remember, Elon's share price is at $54. It's now trading at $37, implying quite a high chance that this thing is not going to happen. This deal is not going to happen. He did carry on talking about it. Let's see if we can find it. I think it's at about 2140. Let's have a look here.
is this Twitter deal going to get closed, do you think? What are the chances here?
Well, I mean, it really depends on a lot of factors here. I'm still waiting for some sort of logical explanation for the number of sort of fake or spam accounts on Twitter, and Twitter is refusing to tell us. So, you know, this just seems like a strange thing.
Look, I must say, I'm not so against the bots, because last week when everybody was salty because of Luna, when I did tweet, the bots were quite nice to me. They were like, amazing, good job, love this, yes. And like the real users were like, you put us into Luna. And the bots were like, amazing, good job. You should try this. You should watch this Uniswap video. So, I mean, I don't think you should get rid of all bots, because sometimes the bots are much nicer than the real users. Got to be honest. It's a true story. It's a true story. I mean, got to call a spade a spade. All right, let's talk about some other things that are happening in the market. Blah, blah, blah. Coinbase has got to be the buy of the century. You talk about Coinbase. Coinbase has a market cap now of $14 billion. So, yeah, you see $14 billion. Okay, it is up a little bit today. It's up 3.6% today. Has a market cap of $14 billion. It's got to be cheap. I mean, if you compare, let's just compare Coinbase to like, I don't know. You can't say like BNB, because that's $51 billion. But let's compare it to, I mean, Uniswap, maybe Uniswap. No, let's compare it to like a centralized exchange. So FTX has a $4 billion, but on the token. But I think the fully diluted is much bigger than that. Fully diluted $10 billion. And I think KuCoin, I don't know, just feels weird to me that the bots are much nicer than the real people on Twitter. It is a true story, especially last week. They were much nicer. So I don't know. I mean, I don't need to get rid of all the bots. Last week was a tough week for me when people were blaming me for their Luna losses. And the bots were nice to me. The bots were very nice to me. Very, very, very nice to me. They were still saying, amazing job, good job, you're doing well, amazing news, try this. Then they were trying to sell me something weird. We also had this El Salvador meeting yesterday where, I mean, I must take my hat off to Nayib Bukele, who who's hosting these things and educating the world. But I mean, if you look at the countries here, I don't think any of these countries can make any difference anywhere. Like, these are very small countries. But I mean, it's good that he's doing it. I think he's exactly what we need. He's exactly what we need. Some other news: Cloudflare, one of the biggest internet companies in the world, will be running a proof of stake validator for Ethereum. That's big. OpenSea volume is down. Surprise, surprise. In desperate times, people don't want to buy fancy JPEGs. Imagine that. Imagine that right now, no one's buying punks for billions and billions and trillions of dollars. This is a story. This is a story. So remember the guy that took the bet against Do Kwon, ALGO Trading? So he was like quite confident. Now he's saying GMT is the next shitcoin that will die. It's the new Axie Infinity of 2022. Will short with size at a good time. People making hundreds of dollars with walking on the expense of clueless buyers. It's absurd. Whoa. Also, remember, VCs are waiting to dump on you at like 300x if you buy now for a mid-long-term investment during it. Ooh. So he's coming out again and wow, coming out with his claws out, kitty. Claws out, claws out. Okay, so that's that. A couple of things. Bybit, we are starting to give away 10x and 5x portfolios tomorrow. What do you need to do? You need to go to the referral link below, sign up, put money into your account. I don't care how much money you put into your account. And you can, tomorrow we'll start 5xing, 10xing, and 2xing portfolios again. Then, also, there's a KuCoin promotion for the next month. We are going to be giving away $1,000 a day to anyone that opens a KuCoin account using our link. Remember, if you've opened a KuCoin account using our link, that still qualifies. You need to open the account and you need to put money into the account. Why? Because last time we did it, a lot of you just created fake email addresses and KuCoin said, no, that doesn't count. So we are giving away $1,000 every single day starting tomorrow on KuCoin. So open your account today. There's a referral link below. Open the account today. Also, if you subscribe to the Crypto Banter newsletter, we will be giving away $1,000 to one lucky winner for subscribing to our newsletter. So if you go to our website, sign in with Twitter, subscribe, do that. And I mean, there's a lot of good stuff in here. And you subscribe to that newsletter. There will be we'll give away $1,000 to one lucky winner. We've got 3 minutes. Should we take some Q&A? Got a couple of minutes. Let's come on. It's been a long week. If anybody's got anything that they want to talk about, let's do some Q&A. Gee, the comments are going crazy here. If I don't see you, I don't know, okay, that's not a question. Anybody got any questions? Anybody want to talk about anything? Anybody want to do some Q&A? Let's talk about it. Let's talk about it. Hedera, not a big fan of Hedera. Kim Young, Terra Luna. Can you put money into my account? How am I doing? I'm good. I am rebuilding. Tomorrow I'm going to show you guys my new portfolio. I've restructured my whole portfolio because now Luna fell out. So we have to rebuild the portfolio. We're going to be sharing that portfolio with you guys today. EGLD. I like EGLD. I like EGLD. The only thing that I have a problem with EGLD, I like the tech, but a lot of the developments happening by the Elrond company, which is in Romania. I think I like more decentralized, bigger protocols. Ran, what are your opinions about the DeFi mining projects? Yeah, I mean, I'm very bullish on DeFi. I think DeFi is very cheap because a lot of the money in DeFi got wiped. And it will rebuild. I don't know when it's going to rebuild, but it is going to rebuild. So there we go. What did I call my daughter? I called my daughter Eve, finally. Thank God I didn't call her Luna. Imagine that. I would have looked at her for the rest of my life and wanted to slap her. I mean, it's true. Like, imagine. I would have made a terrible mistake. Imagine you look at your daughter and it's the biggest loss you've ever taken. So you love your daughter, but you just want to it's terrible. It's so bad. I'm so glad. I'm so happy that I didn't call my daughter Luna. Do Kwon, on the other hand, called his daughter Luna, which is I guess a lesson that he's going to live with for the rest of his life. All right, 1 more minute. Did I see ALGO on my watch list? Yes, I am. I do hold ALGO, and it is on my watch list, and we'll talk about why tomorrow. Near protocol definitely is on my watch list. Remember, now on your watch list, you've got to have some high risk plays. If you want to try and make the money back, you're not going to make all your money back on Bitcoin. Or certainly that's how I see it. I'm not going to make my money back on Bitcoin or Ethereum. So now that the market's down, I've got to take some more calculated risks. And that's what we'll talk about tomorrow. The safe bets are Bitcoin and obviously ETH. But you're not going to make 100x on Bitcoin and ETH. Forget it. So you got to think, if you want some 100x's, you've got to have your... it's not going to happen by itself. You've got to get your portfolio right. You're not going to wake up one day and be rich just because it happened. You've got to actually position yourself, and that's what we'll do tomorrow. All right, let's call that for today. I'll see you guys again tomorrow. Until then, hang in there. Don't trade yet. We'll trade together tomorrow, or wait for Sheldon to jump onto his show. See you tomorrow.